Can you do a cash out refinance with bad credit? Well, the short answer is yes. But the long answer is, why is your credit bad? You have to look at your credit report and see exactly why it is that your credit score is low or even down to say 500. But that doesn't make it impossible. I'm going to go in this video, I'm going to go through how you can still refinance and take some cash out, or just refinance and pay off debt, lower your monthly bills and save yourself a lot of money and stress, and the different programs that allow this. So thanks for staying on here and going to watch this video. You're going to get some good information out of this on how some credit things actually do work and what it means. I'm going to give you some real life examples, and I'm going to give you a little background on myself. My name's eglenn, like I said, from your team, your town, and I'm a Philadelphia guy my whole life. And I have some credit challenges in my past too. So I'm talking from experience as a mortgage loan originator and also just personal. I had a bar restaurant years ago. After the housing crash, things got bad. And back in 08, 09, and 10, I hung on. I was able to sell it in 2014, but after that I had to claim bankruptcy. So literally, the bankruptcy is still on my record till the fall of this year. And it affects me in everything I do credit-wise. Everything's more expensive for me. I can buy a house, I can buy a car, I can get credit cards today. Will they give me a high limit credit card today? No. Do I want one? No, not really. You got to be pretty disciplined with credit cards these days because the interest rates are crazy. So you should look into that for yourself. Make sure you're not paying that 32, 33, 34%, because literally that's out there. People are paying that and don't even know it. So anyway, the bankruptcy is going to finally fall off in the fall of this year, and I'll get an immediate jump in my credit score. I've cleaned up everything else I could. That just won't go away. But anyway, so I understand the stress and how hard it is, and the stuff that could tear your family apart over finances, and the sleepless nights, and the phone calls, and the mail, the text messages. In today's world, they text you nonstop when if you're behind, or these collection agencies or can be ruthless. So anyway, watch the rest of this video. If it sounds like a good idea for you to refinance and pay off debt, or just take some stress off, whatever the reasons you're here and going to watch this, there's some good information to follow right now. And thank you again. Like, subscribe, share this to your friends and family. It may help someone. And I've helped some people recently that actually called me in tears that they saved a lot of money per month. So let's go. So here goes a couple recently. We just got them done, and they're going to close, and they're going to, everything's good, they're ready to go. That's only 16 days ago, and the credit score we use for them is 577 right here. So here's these borrowers, right? So 577, their total monthly payments they're paying right now. They had to take on some debt. They had some problems, some emergencies, and they took on some debt they didn't want to, and they feel like the car payment's a little too high. They don't like that. And there are a couple that's going to hold on to their car for a long time. So they're going to pay this off, which is good. We're getting ready to go to closing next week, I believe. But anyway, as you can see here, their new mortgage payment is $1,531 a month, and now this all goes away. That's done, and they save $930 a month. Right? So it's really that simple. When you don't have a lot of current negatives, we can do this. If there's a bunch of current negatives or bankruptcy recently inside of 12 months, or a lot of judgment, stuff like that, it becomes not doable until you can get past that point. And here's even a better example of a retired couple on a fixed income, and they are really, really struggling. And we had to use 528 as their credit score. Right? So they were able to qualify. Same thing here, not a lot of past due stuff. We were able to use a lender to get them qualified. Now, this isn't reporting their mortgage here, but they do have a current mortgage payment of $759 right there. So all their bills added up, and like I said, they're on a fixed income, small pension. It has changed so much for the seniors in our country of how much things cost today compared to what their pensions are worth and what their retirement's worth, from like a middle class family that's been retired for a while. So $22.72 a month is what they're currently paying, and they're really, really struggling. So we were able to get them refinanced. I was able to use the lender to get them refinanced. The new mortgage is $135,000, is the new loan amount, and their payment's $1,150. They're saving over $1,000 a month just with this loan amount here. So that's how fast, numbers can add up. But remember, when you're going to do something like this and you sit down and come up with a plan and you want to free up this kind of money, $1,000 a month or more or whatever, you really gotta really be as disciplined as possible with these things right here. Credit cards are the killer. The interest rates are going anywhere right now from, I don't know, all the way up to 35%, which is crazy. And it compounds daily, which means you could even make your minimum payment on your credit card and it's almost maxed out, and actually adds more to your debt because you didn't make more than the minimum, or you made the minimum, but it doesn't cover the compound interest. So it's really it's really a problem in our society today with debt. So like I said, we can do this under some circumstances and a lot of circumstances, and you can save this kind of money. But you'll never know unless you reach out to me directly and we go through the process to figure out your credit score and credit report. Credit card companies are worse than loan sharks. No offense to the loan sharks out there, but it's just true. Up to 35% that people are paying. So what I was saying in that last couple seconds ago, you can literally make a payment like $205 and you only get to use 60 of it. And in some cases, if you make the minimum payment, your balance goes higher because it doesn't. So refi or home equity loan, I did this in a previous video. That's where this is from. So I just wanted to show you this. With a minimum payment, it'll take you 312 months to repay your debt. And that's a $6,000 loan with an annual interest rate of 29%. So that's how that's a long time, and you're going to pay $19,772 to borrow $6,000. So it's nuts. So you got to pay attention to this stuff. You got to be disciplined with your cards, especially if you're going to refi, or you could take out a home equity loan if you could qualify for that. That comes with payments, on top of your mortgage. But I just wanted to show you guys this. So looking at this, what does this 3% rate mean to you? It's your mortgage if you currently have it, and but yet you have all this debt here also, right? So we're going to say the credit cards, you're paying, we'll say 20% on this, right? We'll say 20% credit cards. We'll say the car payment's 10%. Your personal loans are 10%. Your student loans are 4%. And we'll just say your miscellaneous, that's 4 too, because I don't want to make this gigantic. And then we'll add the 3 to your current mortgage rate. So it's 20, 30, 40, 48, 51. So if we divide 51 by 6, your blended interest rate is 8.5. That's what this is called. When you put these all together like that, we call it a blended interest rate. So your blended interest rate is 8.5. So when you refinance up to 7.5, it's 1% less than your blended rate, and you actually saved almost $2,000 a month. Right, so that's the decision you got to make. I know everybody wants to talk about protecting this 3% rate. Everybody wants to talk about protecting this 3% rate up here. I'm not giving up my 3% mortgage rate. Well, there's other ways to think about this, right? What if you took these savings and you added $1,000 a month, or take the $889 a month and you add it to the principal of your new mortgage, right? Or you kept $1,000 another month or you kept the car payments, but you're still saving $889 a month. So that's the way to think about this stuff, and think about debt and how to use it to help you. It's these debts here, the personal loans, the credit cards, they're out of control in today's world. I mean, the credit card companies are burying people all the time. So this is what you want to think about, and this is what you want to have. I can help you figure this out, and see if this makes sense for you. And if it does, you do it. If it doesn't make sense to you, then you don't do it. It's as simple as that. There's no pressure here. This is information, and you know, saving money is always attractive to me. But like I said, you could take the lower payment of everything, but add back and either take a shorter mortgage amount. Say you want to refinance you got 20 years left and you want to keep it a 20-year mortgage. You might be able to still save money with that. You can do that. It doesn't have to go back to a 30-year mortgage. It's not mandatory. So